Electronic Arts, one of the most iconic names in gaming, has officially agreed to be acquired by a consortium led by Saudi Arabia Public Investment Fund, or the PIF, Silver Lake, and Affinity Partners in a record-breaking $55 billion in all-cash deal. The transaction, which valued Electronic Arts at $210 per share, a 25% premium over this unaffected stock price, marks the largest all-cash sponsor take-private investment in history. For many, this announcement feels like a seismic shift in the gaming industry. But for those who have followed Electronic Arts closely, it's less of a surprise and more of a long-anticipated outcome. Electronic Arts has been signaling for years that it was open to be acquired or merging with another major player in the gaming industry. The deal is a culmination of that strategy. So, in summary, the valuation is $55 billion enterprise value, a purchasing price of $210 per share in cash, or a 25% premium, in a consortium led by PIF, rolling over its existing 9.9% stake, Silver Lake, and Affinity Partners. The financing of $36 billion of that amount, it will be in an equity from the consortium, $20 billion in debt financed by JP Morgan. And the main question is, what about the leadership? For now, Electronic Arts will remain headquartered in Redwood City, California, with Andrew Wilson continuing as being its chief executive officer, with the closest timeline expected in the first quarter of fiscal year 27, pending regulatory and shareholders' approval. The consortium brings together deep pockets and global reach. The Public Investment Fund has been aggressively investing in gaming and esports as part of Saudi Arabia Vision 2030 diversification strategy, where the Saudi kingdom foresee a possible future where the petroleum, oil, or gasoline will no longer be its main economic drive. Silver Lake has a long track record of backing technology and entertainment giants. Meanwhile, Affinity Partners, led by Jared Kushner, adds another layer of capital and political connectivity, which is kind of strange because his famous celebrity-in-chief father-in-law is not a big fan of video games, so this raises kind of a red flag and more about the political connectivity, which political always ruins everything. This deal didn't come out of nowhere. For years, Electronic Arts has been quietly, and sometimes not so quietly, positioning itself to open for consolidations. And this started with rumors in 2022 where reports surfaced that Electronic Arts explored a potential merger with NBC Universal and even held talks with Disney, Apple, and Amazon. While none of these deals materialized, they signal Electronic Arts' willingness to consider a future under a large umbrella. Industry consolidation pressures, of course, have been part of this history, as the gaming industry has been in a wave of mega deals, with Microsoft's $69 billion acquisition of Activision Blizzard King, Take-Two's purchase of Zynga, and Sony acquisition of Bungie and other studios. Electronic Arts, despite its size, risks being left behind if it didn't find a strategic partner. And part of Andrew Wilson, or Electronic Arts CEO's vision, he has long emphasized that the company's future lies in blending gaming with broader entertainment and sports ecosystem. To achieve that scale, EA needed to be either acquired aggressively or be acquired by a partner with deeper resources. In short, Electronic Arts has been preparing for this moment for years. The company's public openness to mergers was less about desperation and more about a strategic foresight. So why this deal matters? With $55 billion behind it, Electronic Arts can accelerate investments in new technologies like cloud gaming, artificial intelligence, drive content, and immersive sports experience. The influence in the public investment funds by Saudi Arabia's prince in esports and Silver Lake's tech portfolio open doors for EA to expand beyond traditional gaming market. Of course, the current franchises of Electronic Arts, including Sport FC, Madden with NFL, Apex Legends, Battlefield, The Sims, Dragon Age, are all cultural touchstones. These deals ensure they'll be backed by long-term capital rather than short-term market pressures. And finally, this acquisition underscored that gaming is no longer just entertainment. It's a pillar of global media and technology strategy. I think the backstory in all this is an identity crisis for Electronic Arts. For decades, Electronic Arts has been both admired and criticized. It built some of the most successful franchises in gaming history, but also faced backlash for aggressive monetization, rush releases, and corporate culture. By the late 2010s, Electronic Arts was a paradoxical position, too big to be nimble, but not big enough to compete with tech giants entertainment in gaming. That's why Electronic Arts began floating the idea of a merger or acquisition. It isn't about survival, it was about a relevancy in a rapidly consolidating industry. The company recognized that the future of gaming will be shaped by ecosystem, not just individual publishers. So the speculation on what could come next, if the deal closes as expected, Electronic Arts will become a private company, free from the quarterly scrutiny of Wall Street. That could give Andrew Wilson and his team the breathing room to take bigger creative risks, or in a simple matter to say, they are no longer forced to explain what they are doing to investors. But it also raised questions. How would the public investment funds' growing influence in global gaming reshape the industry? Will Electronic Arts culture and creative independence survive under new ownership? Could this trigger another wave of acquisition with companies like Ubisoft or Square Enix next in the line? Which actually, Square Enix was a long rumored to be Sony's and PlayStation next acquisition, but nothing has happened so far, and Square Enix actually abandoned his exclusivity deals and be more open to every platform they can reach to. But this is another topic for another episode. Electronic Arts' $55 billion acquisition is not just a business transaction. It's the culmination of a decade-long narrative. For years, Electronic Arts has been signaling that it wanted to be part of something bigger. Now it has found its partner. This deal cements Electronic Arts' place in the next era of gaming, where the lines between sport, entertainment, and interactive media blur into one. Whether fans cheers or groan, one thing is certain. The EA that emerged from this acquisition will not be the same company that once proudly stood as the world's largest independent publisher, and it remains to see if this will be for the better.